following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. This is, of course, your bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as from the ever-expanding, ever-insightful, ever-exciting Options Insider Radio Network. And stay tuned. I know I keep promising stay tuned for that Futures Options show. It's coming to a podcast provider near you very shortly once we finish getting all that post-production work in place. Should be a fun one. Take the Option Block and then turn it up to 11 and talk about futures options. And that's what we're talking about there on that Futures Options program. Title, still TBD, so we're working all that stuff out. But coming soon to an audio provider near you. And of course, joining me on the old show today, coming in the farthest distance. So actually, I don't know, we might have a tie today because we're mixing things up a little bit. So we have someone else beaming in from pretty far away too. But we'll start off with the man beaming in from the farthest direction in the area of the Northeast. We'll say that. He is Mr. Andrew Giovinazzi from OptionPit.com. Mr. Andrew, welcome back to the show, sir.
It is a pleasure, as always, to be here. I'm thrilled, beyond peachy thrilled. And tonight we're having Vietnamese lobster, I think. Vietnamese lobster tonight.
Vietnamese lobster? I don't even know what that is. It sounds somewhat interesting and frightening at the same time.
It's Maine lobster with, like, crazy Vietnamese sauces thrown on top.
So spicy lobster.
Spicy lobster. You know, like if you're in San Francisco, it's a kind of like there's some places there in Chinatown where you can get some tasty spicy lobster. Of course, it would cost you an arm and a leg, but in Maine, it costs you nothing. Just nickels and dimes out of your pocket.
Yes, they're just walking down the street. Just pick them up and say, now you shall be my Vietnamese dinner tonight. And you just pour some sauce on them and you eat it right there. You carry a little Vietnamese sauce in your back pocket just in case you come across a lobster crossing the street.
Exactly, a little container of fish sauce, a little container of Vietnamese fish sauce.
And also joining us, beaming in from much closer to home, you know him, you love him as the Viceroy. He is Alex Jacobson from Options Express. Mr. Jacobson, welcome back to the show, sir.
Hey, Mark, good to be here today. Real busy day with all the earnings going on today. Normally before the show, I lean over to the trade desk, to the trader sits across from me, Bill, and I go, what was active today? And he kind of pauses for a moment. He's a very cerebral young man, which means he's going to throw something at me now that I've said that. But he paused today and he said, lots of names were active today. And I said, well, what was going on? He goes, Amazon, Starbucks, Celgene, Baidu, F5. It was all the earnings names. So it was kind of a atypical day in the option market, with folks trading a lot of the names that we're waiting to see results on.
Yes, a lot of names waiting after the close for us here to dive into. But before we dive into those, allow me to introduce a new co-host for the program. Our listeners are used to Uncle Mike joining us on our Thursday episodes as well, but of course, he has those Thursday night webinars he needs to wrangle as well. So it's getting a little bit much for him to do both. So we have a nice pinch hitter sitting in for Uncle Mike today. He's going to be rotating in onto our Thursday shows going forward. Listeners may remember him from his recent guest appearances. He is Matthew Bradbard, the Futures and Futures Options Major Domo over there at RCM Asset Management. Matthew, welcome back to the show, sir.
Glad to be back. I don't know how I follow up on that talk of lobster. There's mini season down here in Florida, and I was diving yesterday, and I guess they call them bugs. So we got a lot of bugs yesterday. We got the limits, and then the commodities market, not a dull moment too. We had some big movers today. The two outstanding moves that I see, coffee was higher by 3% today, and soybeans were down by 3%. So I'm sure we'll touch on some of these commodity movers a little later.
Sounds good. And I think with that, we're going to dive right on into the trading block.
The trading block.
All right, and welcome to the trading block. This is, of course, the portion of the show where we talk about what was moving the old street, what was catching our attention both during the session and in the after hours. The after hours really becoming the lion's share of the activity these days because we are in the midst of earnings season. We have a lot of names coming out today. Amazon, a couple other ones really to talk about. But I want to just jump ahead. I'm gonna pull one even out of the old odd block, just so we can talk about it now, because this one is just so crazy, and it just came out, so it's top of mind for all of us here on the show. We're going to roll on into everyone's favorite name on the show, and Andrew's, of course, favorite name, Zynga, and we're going to pull this one straight from the odd block. We have this for later. Of course, we saw Zynga closing today at nearly $3.50 even, $3.49. A lot of rumors bouncing around all over the place today that maybe there was some action impending for Zynga after the earnings. And we saw someone coming in apparently buying into this hype quite a bit because someone came in today and bought the August 3/2 straddle. He paid 29 cents roughly for the call and the put each, so it's talking roughly 60 cents, 58 cents total for that straddle. He did it about 5,000, actually a little bit on a ratio, 4,000 by 5,000 times. So you're talking, since this is, remember, this is a $3.50 stock, listeners. So this person paid 17% of the value of that stock for a 1 month straddle. The stock closed at $3.49, and as of right now in the earnings after hours, it is trading at $3.49. So this may be one of the worst straddle buys I've seen in a long time. But this one came across my desk. We get a lot of unusual activity coming across my desk, obviously on a regular basis. We do a lot of it here on the show and on the website. This one just rubbed me the wrong way. This is such a bad trade. This is not something you should be doing, listeners, paying 17% for a 1 month straddle, unless you really think something's going to happen. Even if you do, there are better ways to do this. And this one annoyed me so much that I went in to take the other side of it because it just bothered me. And this guy bid up this straddle so much. And Andrew, I don't know if you were watching this a lot today as well, but this guy bid up this.
I was. Shockingly, I was.
Yes, he bid up this stupid August 3/2 straddle so much. You could sell it. And then if you were worried for about 63, 65 cents, somewhere in that range, and if you were worried about the earnings, obviously like tonight, you could leg into something like I went and bought the July weekly 3-4 strangle against that. That covers you all the way through earnings. That's the protection you want. And because that idiot bid up that straddle so much, you could do that for nearly 50 cents. That is a 50-cent risk trade, listeners, and you could do it for almost even. I mean, maybe if you're lazy, you get in for 48 cents. But it was one of those. You have to scratch your head and say, what are these people doing? And it looks like right now in the after-hour stock trading $3.47. Zynga's not going anywhere.
I haven't seen any earnings yet.
It was moving quite a while. If you saw it earlier, it was moving quite a bit.
Well, it moved. It was kind of oscillating a little bit, but I haven't seen it really shift here. I haven't seen it come across the tape yet, but it might. I was amazed at yesterday is the September 3/3 strangle was less than 40 cents yesterday. September for 30, you could have it for 37 cents. Before 10 a.m. yesterday morning. It was 55 volatility, now trading 78 volatility.
Alex, all this talk of buying premium in a $3 stock must really just rub you the wrong way.
Well, especially on the call side, sure. You know, it's, as we used to say when I worked at Merrill Lynch, it's an option without expiration. But the AUG 3.5 call was the fifth most active equity option today in the industry. So somebody's out there playing in these.
Yeah, 47, nearly 48,000 of those going up today.
47,000 contracts. They bid those bad boys up. Facebook freaked everybody out. Oh, now it's starting to trade down a little lower.
Yeah, it's trading down a little lower now.
As we all know, cannot help but disappoint on earnings.
The moral of the story is you could leg into that spread for almost riskless, and at least through the earnings, which is what you're concerned about, because some idiot is just bidding up all this nonsense. Good thing you didn't buy that strangle before this idiot came in. He would have bid up your stuff too. This kind of stuff just rubs me the wrong way. I had to highlight it. Because we talk about a lot of stupid trades here in the odd block, buying a ton of ridiculous, worthless calls on the upside and stuff like that. But this one, I mean, 60 cents? That just violates me to the core.
Well, the good thing about it is just says if you're patient enough on some of these stocks, you actually can look for trades that have really high risk reward, which is what we spend time in Option Pit doing.
And then take the other side of them.
Same risk. It can happen. It can happen to you.
Yes, our moral of the show, time and again, the size money is usually not the smart money. And you can do things in a much more nuanced fashion than a lot of our odd block victims do. But, of course, let's fast forward away from Zynga because I did kind of jump the gun a little bit on that, but it's just been sticking in my craw all day. Of course, you have another big...
pulled off yet? Because, you were pretty hot under the collar there on that.
You know me. Very rarely is a trade stick in my craw like that, but this one kept bugging me all day. Anyway, let's talk about another big name lighting up the old tape today. Of course, Amazon. They closed at $303.40, and they were pricing up this one for a fairly substantial move, but not as perhaps substantial as you might expect given Amazon's recent history. This straddle went out at about $18 or so, looks like on the show, about almost 19, 18.5, 19 here for the front month weekly 300 straddle. It's got about $3 worth of juice in it because it closed at 303.40 and looks like we're trading down about 10 handles in the after hours now to about 293. So far at least looks like relatively tepid earnings coming out of Amazon. Of course, the initial move, given what we've seen of late, who's no idea what's going to happen. Of course, the big mover, this stuff always has to happen on the days we don't have shows, of course. The big mover everyone's talking about over the past couple of sessions, Facebook. I mean, this thing just out of the park. Going back to, we're talking about odd block again. I remember, Andrew, you highlighted for us a couple of days ago on the site, in between our shows, of course, back to July 23rd. If you want to read the full alert, listeners, you can surf on to the Options Insider. You can type FB into our search bar. Just go back to the July 23rd article in the Unusual Activity about Facebook. We highlighted a block of 18,000 of the AUG 30s going up for 22 cents for a total of almost 30,000 went up on that day on that strike. At the time, there was like 48,000 contracts open. So I think you assumed, Andrew, I pretty much assumed as well, that was just closing paper. Some guy had overwritten that strike maybe and was taking it off ahead of the earnings. He didn't want the risk.
Right.
But fast forward to the next day, and there were about almost 80,000 contracts open on that strike. So that was opening paper. This guy was doubling down here ahead of Facebook earnings. Maybe that was him in the open interest. Maybe that was new paper for him, whatever it was. He added about 30,000 contracts here for 22 cents. Those calls went out today, $4 and about 25 cents. So about a $4 almost exactly winner on that trade. If he did all that 30,000, then that's about $12 million in his pocket. Not bad for a few days worth of work. We talk about unusual activity all the time here on the show. People loading up on upside. This is one of the few cases where that one paid off. Granted, I hate to highlight those because it makes you think that's a good, just like the guy plays the horn on the craps table all the time and some idiot comes in and starts throwing some bad numbers and he makes money. It looks like a good bet, but it's not. This is not a good long-term betting strategy either. Loading up on, what was this at the time, like 20% out of the money Facebook calls. I mean, if you had this viewpoint, there's many different ways you could have done this much better for less of a layout. But c'est la vie. It worked out in this case, and this guy have some very timely activity here in Facebook. What were you guys watching in Facebook, Andrew? I'm sure a lot of your mentees and clients are pretty active in that.
We had Funky Fly was on a blog for mine on Wednesday? What's today? Thursday. So Tuesday's blog. The skew was super flat. So actually, you could buy ratio call spreads with almost no downside risk in Facebook, all the way up until the very last moment. So from an earnings play point of view, you could, and that's what we did actually for our during the pit report. You could buy upside for almost no risk by trading a ratio call spread, and we have a lot of clients that were doing the happy dance last night over that kind of stuff. So
gotta love no risk upside. As long as you didn't go the old 1/30 ratio, I think you'll be all set.
Exactly. 1/2 was good enough. Actually, 3/2 worked. You don't need $7. I mean, almost anything works as long as you have an extra call contract. So yeah, it was long extra contracts. So it was like long 3, short 2, and it worked. Worked out fine.
Mr. Alex, what was catching your eye in today's activity, sir? Any of these earnings names really ringing a bell with you?
Yeah, well, Facebook obviously was lighting up the phones. And, if you think about it, we've had 2 of them in the last 10 days or so. You had, Microsoft disappoint and strikes you could have bought for pennies went out at $2 and $3. And same thing with Facebook today. And to your point, Mark, you don't want to showcase those because, then everybody thinks that's what they should start looking for in the options market. But, these are the stories that break market makers' hearts. And, customers love these stories, talking about buying stuff for pennies and seeing it go off big. When I worked at the CBOE in the heyday of the OEX, when basically everybody was there were more premium sellers till 87, obviously, than there were premium buyers. But we used to joke about it on the OEX road trips. Back then, OEX road trips, we'd get 3,000 people in a room, and we'd listen to everybody's positions, and we'd add them up, and they were 4 times the open interest. But these are the stories that, kind of bring people to the options market. But to both your point and Andrew's point, you got to have some balance here and recognize that these are, rare events. But if you do want to speculate on an earnings event, and you do want to speculate on a disappointment or a big surprise, the options market could be a very interesting place to do it. And to Andrew's point, if you do it in ratio spreads, you're not going to lose a lot of money if you're wrong. And I think the key to making money in the options market is not focusing on how to get rich, which is the problem with these, penny things going to dollars, but it's focusing on risk management and a 2x3 or 1x2, where if you're absolutely dead wrong, you lose pennies, is a great way to play some of these.
And I should just clarify for our listeners who are scratching their heads. Wait a minute, ratios, that's dangerous on earnings like that. Andrew, of course, is talking about back spreads, so kind of the reverse ratios that a lot of our listeners are used to, where they're used to buying 1 call and selling 2 or 3 to finance it. Andrew was taking somewhat of the opposite approach. He said 3x2, so a little bit of a back spread, so you have some net long units, which in the case of like a Facebook, when it rallies like that, that is actually a good thing, as opposed to being net short 7 or whatever upside strike you were short or whatever the case may be. That would be a different scenario altogether.
And to both your point and Andrew's point, if you start thinking about back spreads, you start thinking about ratios, and you are an active trader. I'm going to violate my rule here that I'm going to go backpedal on it. But if you are looking at some of these things going to earnings, and you do have the luxury to sit at a machine all day and see some of this stuff trade, start looking at some of those ratios that you can put on for nothing or for cheap. I mean, there's some great stories of the early days of the CBOE when markets weren't as efficient as they are today, and there weren't a lot of machines on the floor. And, people could stand at the pits and leg into back spreads for, a $5 back spread for a $4 credit. Now today we're all going to say, well, you can't do that. That's never going to happen. It's not true. You're going to take the risk of legging in. But being a well-educated trader and looking for ideas like that, they will exist on event days.
Speaking of event days, we do have a new voice to add to our cacophony today, and he's going to bring a little bit different background than I think Andrew and Alex and myself do, with all of us kind of lean more towards the degenerate equity and index side of the space. Matthew, of course, focuses more on the futures and futures options side of the space. You do all those great newsletters that the guys over at RCM send out all the time. So, Matthew, why don't you go ahead and give our listeners a little bit of a rundown of some of the things that have been catching your eye in the commodity space, whether it's the futures or the options or maybe both.
Yeah, certainly. I mean, there's a lot of action. There's never a dull moment. I track and follow about 40 different markets. It's crude oil. Since it's been above $100, it's trying to, it looks like it's kind of running out of gas, no pun intended, where it looks toppish. It's come off in the last couple of days, so we'll see what happens there. That market is always interesting. I do a lot of trading in the soft sector. So I mentioned in the opening, big mover today. Coffee was up 3% on some weather issues down in South America and Brazil. We have some tropical storms moving towards Florida. Could affect not only my backyard, but affect the price of orange juice as well. It's interesting what's going on in the bond market as well. I trade with clients 30-year bonds and 10-year notes, and as soon as Uncle Ben and his cronies open his mouth, we taper on today, taper off tomorrow. You see two-sided trade there, and the metals have come back to life too. You have gold up today and silver, just in the last half hour have caught a bid. They're both up 1% on the day. The biggest losers of late has been agriculture. We've just been getting hammered. This is, again, a weather market as well. Soybeans is traded down the daily limit yesterday, and it's down, over 10% here in the last 3 sessions. So big move in the agriculture market the last couple of days.
It's interesting you should mention that, Matthew, because I was just chatting with a CTA yesterday, and he was lamenting just the state of the commodity markets right now. And I thought it would actually be a decent time for him because, just so much activity in a variety of products. Like you mentioned, the ags, coffee, metals have certainly been moving. Energy's been moving quite a bit. And he was saying he's talking to a lot of CTAs who are receiving a lot of drawdowns these days. He said in particular that sharp spike downward in the metals, in particular gold, seems to really have bitten a lot of gold bugs and done a lot of damage across the CTA and commodity sector. Has that been your take as well? You're hearing that from a lot of people that things are pretty rough right now,
I mean, that move you saw in April that I think you speak of, where gold dropped, several $100s inside of 24 hours. I mean, that's certainly, if you're on the wrong side of a trade like that, it could be detrimental. It really depends. I deal with a lot of niche traders, guys that just trade energies, just trade agriculture, just trade interest rates. So it's a mixed bag. Some of the longer term trend followers have got beaten up, but they've had a tough go at it for the last couple years. And then I have some guys just trade energies and agriculture that were on the right side of these moves of late. So it really depends trader to trader. I mean, what I can notice is you're seeing a little bit more volatility where you're seeing bigger swings. We allocate to some option sellers, and the volatility in a lot of the products they trade hasn't been there. So they've had to adjust the way they trade and maybe trade a little bit more aggressively just because some of these guys are naked, and without movement, they're having to sell closer to money or sell more options. So I kind of pull back, and I don't really like allocating when they have to change their philosophy because the market evolves. So I'll look to move to different type of managers when you see instances like that.
Yeah, and of course, gold is a weird beast unto itself, too. They don't call them gold bugs for nothing. People get a little kind of weird around gold. I know a lot of people who are deep into the metals, and just the notion of even selling gold is just anathema to them. It's kind of just acquire.
Every day.
Yeah, so I could certainly see why some of those people would have been bit on a movement like we've seen over the past few months to the downside there in gold. Those. Oh, good.
There's another cross current in futures, and Matthew, I'd like to hear your input on this. But that's the CFTC is floating this proposal about letting the exchange clearinghouse hold the margin, and it spikes margins a great deal, which sounds to me as, we have a futures business here. We have a very robust futures options business, that's not going to help the futures business and could help the futures options business a ton. Matthew, have you seen that proposal?
Yeah, I mean, I haven't read it cover to cover. I'm very familiar with what you're talking about, and I think it would make it a lot more expensive to be involved in the futures industry. And the whole idea, we'll talk about speculating and how we can buy or sell options or trade futures, but really why this market originated was hedging, and it could literally put people out of businesses. Forget about the financial institutions, but your mom and pop dairy farmer or farmer. I mean, it's going to be a lot more expensive to play, and I'm not in favor of the proposal how it is current.
Yeah, I agree.
Yeah.
And it's an ugly proposal, and this is what I'm going to get in trouble for, but what the hell? Why not? That's what we do on this show. I think it's the regulatory environment that we're all in, whether it's securities or the CFTC side, and the pendulum has really swung back hard on a lot of these issues, and it's a difficult regulatory environment. And that proposal, to your point, Matt or Matthew, I forget which you said you prefer, it takes away the hedge exemption. It's not a good thing.
I agree. I mean, I think there does need to be some, changes. Obviously, the industry as a whole has two black eyes with, MF Global and PFG, and I don't foresee an event like that in the immediate future. But I think those are drastic measures, and maybe there's a happy medium somewhere in the middle to make, the investing public feel a little bit more comfortable.
Yeah, the proposal. Let me just. Because we're kind of talking a little inside ball here, and I don't want the listeners to not understand. The proposal is margins are held at the clearinghouse, not the firm. And because you're not going to be able to update clearinghouse numbers, and I'm oversimplifying this, Matthew, so in that sense I apologize, but because you're not going to be able to meet, margin calls via the clearinghouse because the money's got to go to the firm first, and then it's got to go over to the clearinghouse. They're talking about having enough money on margin to meet many events, so that you would not get margin calls. Today you get margin calls with relatively modest move, and again, margin is intended to sort of cover the firm from having an unsecured from the time you trade to the time you pay. The challenge with moving it to the clearinghouse is you're going to need a longer time frame, and therefore they're going to command more margin.
Alex, I'm glad to hear you're finally getting into the spirit of the show and tweaking the regulators and tweaking everyone else. It's about time.
They're regulating to regulate. They're not solving, the problems that I think are fairly solvable. They're whacking at something with a hammer, and they're not really looking. What they really need to do is, they have to use a scalpel really and call the firms to the carpet they're holding these funds. And the reality is like an MF Global, they broke the rules anyway. I mean, you can keep creating rules till your head caves in, and there will still be a desperate firm that'll break the rules to stay in business if they need to.
Yeah, and I think
there's nothing you can do about it.
I think that's the thing customers misunderstand. I think customers believe that the regulators are detectives or sheriffs, and they're not. They're archivists. And I know I'll get in trouble for that comment, but that's the problem. And the reality is, everybody's clever after the fact, but you got lots of people who want to trade with as little money as possible. They kind of want to sit on the razor's edge of margin, and that's true on both the securities and the CFTC side and the future side. And the industry has ways to address it, but to the point, you've had two black eyes lately, and you've got regulators who are going to swing that pendulum back, I fear, a lot farther than it needs to go.
Since we're talking about regulators, I can't close out the old trading block with at least hitting on this one because I love their excuse that they gave. It's fantastic. We've talked, if you attended our event a couple months ago now, the Unusual Activity event, we discussed how infrequent it is to see the SEC come down on insider trading and options. It's just very rare. There have been a couple of cases of late. Both of them really were traced to overseas accounts that were then frozen, and then no one came forth to really claim them. The most recent was in Onyx Pharmaceuticals, which just gapped up here at the end of June. Corporate action was announced. It gapped up from about 90 to 130. Someone came in, obviously, and made a boatload on some well-timed calls. The SEC froze those accounts to the tune of about $2.5 million. Well, two guys came forward today here, both from Dubai, saying that they needed those accounts to be unfrozen. They shouldn't be unfrozen. They shouldn't be frozen. And they said they did their own diligent research, and this was just a legitimate speculative play. And the reason they said that they loaded up on all these upside calls here in Onyx Pharmaceuticals in this perfectly timed fashion was because he had been following it on Onyx since, quote, Jim Cramer on CNBC's Mad Money said it may be one of the best new drug companies in the world. So there you go. He used Cramer's pick as an excuse to justify a bunch of upside call buying the day before of a takeover. Oh, Cramer said it. So I should buy it. I think that's fantastic.
It has to be good.
It has to be good. Cramer loves it. That's funny. I was hoping Sebastian would be on so I could tweak him. I know he's in love with Mr. Cramer. But c'est la vie. I shall have to tweak him remotely through you, sir.
It's more important
You know what? All the listeners should be aware, and now I'm going to sound like a regulator. You can't trade anonymously. And in the options market, if they're not aware, any position over 200 contracts gets an ID. I don't want to say it gets regulatory scrutiny, but there is something called the LOPR report, LOPR, large option position reporting. And anytime there's over 200 contracts to one side of the market, and I'm going to screw up crossing the T's and dotting the I's here, the carrying broker has to identify who is the account. It either has to have a social security number or tax ID number or some ID. If it's offshore, if it's in an omnibus account and there is no tax ID, then the carrying broker has to identify it. But I used to get that question all the time: is can I trade options anonymously? Can I open an account offshore? And unfortunately, you can't. And here's the wrinkle in this. Even if a broker opens the account and you do the position, if the LOPR report isn't filed, you're never going to close that position. The regulators are going to seize the position without a LOPR report. Now, some of you are saying, has it ever happened? And when I worked at the exchange community, it happened frequently. Probably didn't get a lot of press, but don't come to the options market if you're going to do something that you shouldn't be doing with the assumption that it won't get figured out, or you could do it anonymously because it's in the options market. The world of electronics, it's just too easy to track
Let's go
that
buy the
stuff.
stock like SAC did. And see, look at how well that worked for those guys.
Yeah, there you go. Can't run one of the largest hedge funds in the world and not have a few crosshairs on you, I would think, and probably some dubious trades in your history.
And did you see they're actually going to try to shut the fund down?
I didn't see that latest portion of it. No.
It's
10
big
billion
deal.
in fines. They're talking 10 billion in fines.
Yeah, they're trying to close them.
There's a lawyer, Justice Department lawyer who's going to be running for governor someday or something.
Yeah,
Pretty much.
I will just say this on that story. It's not really an option story, so I wasn't really going to get too deep into it. But I remember reading a report a couple years ago about how much they were paying for their stock commissions. And this is the firm that obviously does millions and millions of shares. And I looked at these numbers, and I was like, it was a couple cents a share or something. I was like, wow, that actually seems kind of high. I think I was getting a better rate than that when I was a market maker, and I certainly wasn't doing millions of shares a day. I was like, why would they be incentivizing these firms with such high commission rates? And then you start looking into how much information sharing is going back and forth with these brokerage firms. And certainly anyone with any sense could certainly raise an eyebrow at that alone.
So the typical institution today pays 2.5 to 3 cents a share and pays $2.5 to $3 a contract. And some of you are going to scratch your head and say, God, the average retail customer pays a lot less than that. What you're paying for is, and as former market makers, you're paying for shows. And that's a controversial area. I don't want to expand on it because we've all pontificated enough today, but on a future show, maybe we could talk about that a little bit. The other thing, by the way, you're paying for is firm capital. If you're a big institution, because a lot of times you're going to want the firm to generate liquidity for you in a trade. And so it's not about cheap execution. Firms can get cheap execution.
Yeah, but you have to wonder what else they're paying for. Exactly.
Is they're asking for resources.
Yeah.
They want liquidity. They want somebody to take the other side every once in a while. Yeah. It's a different business.
Oh yeah, entirely. But it definitely kind of raises. I think anyone who has has spent any time in this business looks at that and it raises some eyebrows of in this very Darwinian world of trading.
That's another thing they wreck by regulation, right? If they don't look around for the other side, then these customers are never going to get filled. So it's just, I think a lot of times the regulators don't actually, I know this sounds weird, they don't quite understand the business they're regulating.
No. I'm going to hang up on you right now, Andrew. You're spouting lies. I refuse to believe a word coming out of your mouth. Before we continue with these continued lies from Andrew, we're going to keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and welcome to the Odd Block. This is, of course, the portion of the show where we highlight the interesting and or the unusual activity that's lighting up the old tape. We talked about those Facebook, shall we say, well-timed calls coming up a couple of days ago, pocketing a nice cool 12 million on that trade. So that's pretty well-timed. We see someone with a little bit worse timing today lighting up the old tape in Crocs. Ticker symbol CROX. You know them, you love them, those horrible rubber shoes that everyone seems to like to wear for some reason. They closed today $13.55, pretty much down about 20% on the day today. So not exactly a banner day for Crocs. They're usually doing about 1,600 contracts a day, doing 28,000 today. A lot of people diving in off this bad news here coming in for Crocs. And we saw someone kind of following suit here, trading the AUG 1617 1x2 put spread for prices around $1.50, $1.55 or so, doing it 3,000 by 6,000 times. Given that there's some sizable open interest up here on the 17s, looks like this guy was rolling a loser and taking it down a few notches. Is that your take as well, Andrew?
It was, I believe, he entered the world of pain on this trade. It's like one of those 1x2s. You look at the risk reward, like, oh, this is a nice one, and it goes kaplooey. So it definitely went kaplooey. It looked like he was closing. He was trying to sell out his long side where they were trading, and looks like he wasn't quite paying up for the short 16 puts, but close enough. So I don't see how he could have put this on in any way, shape, or form that would have made it profitable. It just looks like a big black eye. Ouchie.
You know, it's funny. I have mixed feelings on Crocs because I hate those shoes. I think they're atrocious. But I love the company, if for no other reason than shortly after we launched Insider, back in those very early days when it was a brand new entity and we were watching the traffic every day and seeing what was going on. I'll never forget the first time we ever broke through 1,000 readers in one day. That was when we highlighted some unusual activity on Crocs. And people ate that up. It got linked everywhere across the board in Google Finance. Everyone started linking to it, and our traffic shot up well past 1,000. I was like, "Wow, I had no idea there was."
It was a flyer back then.
There was so much potential traffic to be gained. So I always have fond memories of Crocs, even if I don't exactly like the old shoes. Moving on here in the odd block to a name, talking about cheapo odd block specials. We talked about this one a few times before in the past. Ticker symbol DNDN. Yes, folks, I'm going back to the old Denderon well again. This one closing today at $4.52, up about 3% on the day today. This one's been fairly active of late, doing about 9,000 contracts a day, doing nearly 50,000 1,000 today, and the bulk of that pretty much coming in one sizable block of these AUG 7s, coming in, buying them nearly 20,000 times for about 9 cents, with a total of, let's see, nearly 27,000 total on the day. Of course, there's some size open on that strike as well, so it's interesting. So we'll see. What's your take here, Mr. Andrew? Closing
it's really weird. It's like the Facebook one.
Yeah.
It's like this is probably a call rider. Denderon is down quite a bit from the highs. And, call rider maybe closing his calls for 9 cents. But these things got bid up all day. And actually the vol is moved up quite sharply in here. So I don't know if Denderon has a drug coming out. Maybe Alex knows. He knows more of this, some of this sideways news on this stuff. But vol definitely up a lot. I mean, you're talking 30-day volatility of 17 points today. It's a lot. So clearly there were a lot more buyers than sellers of options in this thing. Maybe one of their drugs or something's hitting a sweet spot, but I would, if it's not going to surprise me if the stock is trading $8 in a month.
Yeah, this is another one where after Facebook, I'm a little bit more reticent to jump out and say closing, because we saw what happened in Facebook, and that guy was clearly adding to an existing position. Maybe this guy really loves it, and he's doubling down on good old DNDN.
This guy was hitting the bid at the time. Like there was a 9 cent. What happened was there was a 9 cent bid that was posted. They took the vol up, like basically just scooped all the offers. 9 cent bid posted, and then paper came in and just filled it. Boom! It was a big print. So. I don't know how much of it's going to be closing. It's sure the seller maybe looks like closing, trying to get out, but I will take a look tomorrow and see if there's still that huge open interest. I would be surprised if it is.
Famous last words, sir. All right, we'll keep an eye on that one. Interesting one. Post Facebook, see if everyone's doubling down on their upside calls, or if this is indeed what it appears to be on the surface, which is closing. All right, and we already hit on the Zynga. So let's keep on rolling right on into our next segment. We're going to do a combo Express Block / mail block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, dear listeners, welcome to the Express Block. We're going to do something a little bit different today, because we're also going to merge in a little bit of a mail block here. And the reason is because we have a question that is just right up the Viceroy's alley. So rather than doing multiple segments, we'll do it all together. And Alex, if you are ready, sir, I will unleash this question. It comes here from Mr. Tom P., and he writes, are we ever going to see walk limit on single leg trades? I'm a teacher, so I can't always be there to close out my trades on the open. This is particularly difficult around earnings season. I may miss the only chance to sell my option for a decent price on the open because I'm away from my screens. I would love to be able to enter a target sale price for my options, let's say a long call, etc., and then have OX walk the price down automatically until it hits the actual trading price. This would save busy people like me a lot of time and potentially a lot of lost profits. So, Mr. Alex, in the wake of the launch and the success of Walk Limit, are there any plans over there at OX to really double down and start adding it for perhaps single leg trades like he's talking about here?
Yes. The good news is I sat in a meeting the other day, and they're building it as we speak. Let me do a quick, for those who might not have heard one of the shows where I talked about Walk Limit. Walk Limit allows you right now in spread trades, and spread trade can be anything from 2 legs to 4 legs, but it allows you to enter an order midpoint, better than midpoint, essentially wherever you would like. And then what it does is it sends that order to one of the trading exchanges, generally spreads. Go to CBOE or ISE because they have the most robust spread trading engines, and then it walks the spread order, if it's a credit order, down to an acceptable limit. For example, market's $1.40, $1.30. You want to try to sell at $1.35. Walk limit lets you enter the order at $1.35, and it says leave it out there for a customizable amount of time, now up to 5 seconds, and then cancel it, put it in $1.34. It's so popular. We did the metric in May, and it saved people who used it $1 million, which is a big chunk of change. And it's really only used by, last time I looked, I think 8 or 10% of our accounts. Part of that is an education issue. Part of that is kind of my challenge. But yeah, we're going to have it for single names. They're building it now. It'll go into a build that should be available in the fall. Why wasn't it available originally? Because of exchange cancel fees. And the thing about both the CBOE and the ISE, and maybe a couple of the other exchanges, I'm no longer an expert on exchange fees, but the CBOE and the ISE had no cancel fees on spreads, and as I said, they had the most robust spread books. There are still cancel fees on single orders, but we're going to figure out how to keep our ratio right so we're not subject to cancel fees. So yes, it's coming in the fall. Yes, I know a lot of single stock, a lot of single leg people have been asking for it, and yes, it's coming.
Well, that's great news, because I know we've received some feedback on this. We're not even OX, but a lot of our listeners have written in asking similar things, because that walk limit is such a cool tool, and because it is so useful for exactly this use case that he lays out. This is someone who's got a day job, he's busy doing other things, he's not sitting at his screens all day. So, and particularly on earnings season, that vol evaporates as soon as the open comes in once the move is done. And if you're not sitting at your screens there to chase it, you're going to miss it. So if you can have something that will do that for you and kind of accomplish this chasing, we talk so many times on this show about how difficult it is for retail to effectively trade long premium, let's say through an earnings event. This is something that could potentially help that, and that's actually a very interesting thing, I think, for a lot of our listeners, given all the controversy we've discussed of late with so many of these moves only happen in the after hours. The few chances you do get to have them happen through the open, you want to be able to take advantage of them, and this is certainly one of the tools that you could use to do that. All right, thank you for that, Alex. Now we're going to keep on rolling right on into our final segment, Around the Block.
Around the Block.
All right, everybody, those car horns mean that it is time for our final segment. Unfortunately, it is the Around the Block segment, and we'll kick it off with a quick check-in on our earnings names for today. Amazon has since caught a bit of a bid post, or since we talked about it at the top of the show here. It was trading down about 10 handles. Now it looks like only about 4 to 5 or so in that range. It's vacillating a little bit. Actually, about 4 now, just gapped up a little more. So yeah, Amazon cutting its earnings losses so far, over in the after hours at least, in half. We'll see if that holds course through the open. And of course, our favorite ZNGA, where everyone was loading up on so much premium, trading down about 40 cents right now, around 310. So that straddle still not paying off, but it's close. So it looks like it might be a wash either way on that trade, but we'll see what's going on. Mr. Matthew, since we haven't had a chance to talk futures a little bit, we'll kick things off with you. What are you watching? What's catching your eye? What's on your trading screens for the rest of this week going into the weekend?
Yeah, no, it's pretty quiet. I mean, there's some inflection points in the currencies and the metals, and I'm managing some energy positions. Really, I think next week is a more active week that I'm interested in, with the FOMC, non-farm payroll, and then week after that we got USDA. It should be quiet here in the next couple of days in terms of commodity land, I believe.
I know you put out a newsletter today about the yen. Why don't you really quick run us through some of these inflection points you're keeping an eye on out there in the FX land?
Yeah, FX-wise, I mean, the dollar, I had anticipated was going to dig in its heels and bounce here. It looks like I could be wrong. We'll see. We're down about 0.6% today, and the biggest movers on the upside are the commodity currencies, the Kiwi, the Loonie, the Aussie. They're all catching a bid today. The New Zealand's outpacing everything, up 2%. What I touched on today, as you said, I do a chart of the day. I highlight one commodity. Today it was the Japanese yen. and you have an ascending triangle that's been forming for about the last 5 months. Now, when I'm sleeping tonight, the Japanese CPI comes out, so that will probably be a market-moving event, but I made a recommendation to a couple of my clients to take a look at the Japanese yen risk to reward. I think you could see the yen appreciate here in the next couple weeks. So if they want to get more information on that transaction or any other, they can find my newsletter on RCM's site, or if they Google RCM or myself, they can certainly find pieces I put out twice a day.
All right, listeners, check those out to learn more about the currencies and what's going on in that neck of the woods. And, of course, Mr. Andrew, what are you watching for the rest of this week, sir?
The usual basket of stuff. Volatility is cheap. We were just going over condors, it's very hard to make any of those trades really look decent, selling premium. So I'm just not. I'm actually don't have much on. I'm actually going to be in Chicago with Mark next week on our big event. So I think a lot of this is trading to me just looks abnormally thin, feels abnormally thin overall. So I think there's just a lot of folks sitting on the sidelines and waiting till the next NFP, because a better employment report means QE. Maybe they start to really taper that, like they said they were going to do. And a bad jobs report means it's just more of the same, or the Fed has to kind of stick around and keep buying bonds forever. I mean, it's getting kind of the story is starting to feel like it's getting long now. Every month that it's going to go on I think the market's going to have a tougher time. So I think that thinness is due to that, just waiting. So I myself, not a lot, I'm not looking at a lot, because not a lot is in a very interesting position. I think the biggest thing is there's just a lot of very cheap volatility in the bigger names right now, like the Apples, the Googles, eBays, all kind of stuff like that, where just the juice is just, 2-year lows. So the problem is every day I look at it, gets lower, so we really haven't done much yet. And so it's just one of those kind of wait and see until we get until something happens that might either press us lower or press us higher, because right now it's hard to make new highs without any
thin markets, low vol, not exactly a recipe for blasting out a lot of premium. Mr. Juice Buyer keeping his powder dry, looking for some openings there for his next chapter in his How to Buy Juice tome.
How to Buy Juice book.
All right, Andrew Giovinazzi. I never met any juice I didn't love.
That might be the title.
I know, that's a good one. I keep giving you all these great titles. You need to just get the ball rolling, sir.
No,
I can only do so much for you.
It's just Sebastian has me so busy, I don't have time to write a book. I'm already writing a new course for us. I'm always writing something.
There you go. Mr. Alex, what are you watching for the rest of this week into the weekend?
Well, earnings season is very much done as of today. The last 3 shows, we've had market days where pretty much nothing's going on. So I'm just going to echo what Andrew and Matt said. We're looking at macroeconomics. We've had small moves. Looking forward into September and October, and then we start looking at Washington, because that's where we're going to start hitting the debt ceiling. And if anything is going to spook this market, it's going to be Washington. Earnings season was kind of a non-event, other than the Microsoft and Facebook. You see all this analysis of earnings, how many beat and how many met expectations. But this last week, the market really didn't do much. Individual stocks did, and still looking at the 10-year. But as we roll into August, September, got to start looking at Washington and see if they can get their act together. And otherwise, I'm worried about the debt ceiling, and I think that comes up September, October.
Well
yeah, they
said,
could screw it up again. I agree with Alex. Congress screwed it up in 2011. They could screw it up again in 2014 or 2013. They just don't. They're not seeming to get the idea that you got to solve the problem.
Alex, I like how you're writing off earnings season already. We're only like a week or so into it. We still have a few more names to watch. It's not entirely done yet. For those of us who look to earnings season to generate some grist for the old show mill, we like earnings season. It's a fun time of year.
I agree with Alex. It's done.
All right.
Earnings came
you
out,
two
they're mostly
pessimists.
okay, not too bad, done. It's not going to do anything to marketing.
Since everyone's getting so pessimistic, I'm just going to end this show right now. But before we go, let me check in with each of my cohorts here, my partners in crime, to see what they're cooking in their respective necks of the woods. Matt, you mentioned your newsletters and things. Why don't you tell our listeners again where they can find those and what you're cooking up for some upcoming newsletters here?
Yeah, absolutely. I write 2 pieces every day. I write one piece called Commodity Chart of the Day, where I highlight a currency or commodity, a buy or sell recommendation. That's issued Monday through Friday, once a day. I also, at the end of the day, right after we get off the radio show, I do something called the Commodity Wrap, where I break down about 40 different markets, major market movers. And then every Monday, I put out a piece called The Line in the Sand, which gives technical perspective. It's issued Monday morning, so my guys can have kind of a game plan for the week. And all of this stuff can be found on RCM Futures website. You can sign up for a free 2-week trial. I promise not to harass you, and you can kind of get in my head for 2 weeks to see exactly where I'm at, what's on my radar, and what I'm trading for my clients.
I like a free 2-week trial where there is no harassment. That's always a good trial in my book. Of course, Mr. Giovinazzi makes no such claims, listeners. He may indeed harass you all night long, but it may be worth it if you like his gold course and stuff. So, Mr. Andrew, what are you guys cooking up over there in the land of the pit? Harassment or no?
We have our pro event next week. We have some speakers. The guy that runs the VIX pit and stuff, but only for our pro and professional clients. A couple other guys, interesting topics. Golf, food, fun, and all that kind of stuff. We won't be doing much. Oh yeah, you might. Did you get an invite for the tasty steak? I would make Mark take you.
I did not. I'm just inserting myself for fun and delicious steak.
Exactly. You should come. You should come anyway. But I think, and also Mark has something going on with RCM. I don't know what the date is because he never tells me. He just keeps me.
I believe it is happening. If not right now, it is happening very soon. So listeners,
exactly.
by the time you hear this,
it
will be too late
right now. So that's we don't have a lot. We have a couple. Again, we have a couple announcements coming as far as like new trading products for clients, for traders that are coming out. So we're mostly just working a lot. So all of you, surf on over to optionpit.com for our blog and our what you can see over the last couple of weeks is some pretty timely observations, I would say.
There you go. Check it out for some timely observations. And speaking of timely observations, Mr. Alex, certainly last, but definitely not least, what is coming up over there in the land of OX, aside from what everyone's excited about, the single leg walk limit?
A full pattern of webinars. I'll just showcase a few of them. Monday, Joe Cusack is doing what to expect at expiration and how to trade it and what to look for. Tuesday, Joe's doing diagonals, which if you're currently a covered writer, one of the cheap ways to replicate covered writing and still keep money in cash are diagonals. Always a fun topic. Wednesday, fabulous and exciting presentation on the Idea Hub after the close. And given we've been in a trading range for a little while, if you think we're going to continue in a trading range, the showcase of Idea Hub is premium harvesting, which there will be a futures options version of that also in the fall, about the time we have single leg or close to the time we have single leg. So full schedule of events.
Sounds good, Mr. Alex. We'll look forward to that, in particular the premium harvesting. Always some great ideas coming out of the old Idea Hub. But unfortunately, that's all the time we have for this program. And on behalf of Matt and Alex and Andrew and, of course, myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing and even writing in with such great questions. If you would like to join us on the program, there are many ways to get in touch with us. You can find us on theoptionsinsider.com. Of course, leave a comment on the show notes on our site there. We'll find those pretty easily. You can, of course, reach out to us twitter.com/options or, of course, our new and improved Facebook spot over there at facebook.com/theoptionsinsider, or you can reach us the old-fashioned way. Shoot us an email, questions@theoptionsinsider.com. Just be sure to put the name of the show you're referring to in the subject line so we could sort your question appropriately. Okay, that's going to do it for us here on the old program, and we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.